Thank you for joining me. I'm Alexandra, and I want to talk about Microsoft. So, what they do is they make the Internet Explorer. Too soon? No. So, they're mostly in the business of making questionable decisions, like not improving Internet Explorer for a decade and then just deciding to scrap it another decade later. Or their main cash cow being Windows and then deciding to basically give that away for free. And somehow it works out. It's very interesting. So current stock price just under $245, which gives them market cap of $1.85 trillion. Definitely getting up there. Revenue $143 billion. And again, that's with giving away Windows to a lot of people for basically free. Earnings $44.3 billion, which is nice. PE of 37 with a forward PE of 33. Not terrible. You would think it would be worse with a market cap of $1.8 trillion. But, I like it. Don't hate the PE too much. Dividend yield just under 1% with a payout ratio of 31%. Not terrible with the current bond yields. Otherwise, it's it's not much, but it's a dividend, I guess. Total assets $301 billion. Total liabilities $183 billion, which gives them a total stockholders' equity of $118 billion. And while I really like the balance sheet, $118 billion in equity out of a company of $1.8 trillion is not really cutting it, really, I guess. I don't know, just the relation isn't really there. So as far as risk factors go, I think we've kind of been through everything that there was. We thought that people would switch to Apple. We thought that people would switch to Linux. We thought that in the server market, people would switch to Linux. And Apple actually makes servers now. And so I guess since all of that didn't happen, I don't really think that there's a lot of risk factors left. So people stopped buying Office, maybe. But we kind of had competitors to that for a long time now anyway, so I really don't see a lot of risk factors to Microsoft's business model at this point. So overall, obviously growth investor is kind of out because a company of $1.8 trillion is not going to 10x their market cap anytime soon, I hope. For a dividend investor, you can definitely find better dividends out there, even with a better payout ratio, like in 4 of the videos I made last week. So while I think it's an interesting company, and while I wouldn't blame anyone for investing in it, I think as a dividend play, it kind of is not that useful. For a value investor, the PE is slightly too high. The dividend doesn't really factor in. The balance sheet is minuscule but nice. Yeah, overall growth still decent, actually. So again, wouldn't blame anyone for investing in this, but I think there's better opportunities out there. As far as stabilities go, I think this is one of the more stable companies that you can invest in at this point, especially in this sector. So if you want to diversify, or if you're really into safe stocks, I think that this would be interesting. But overall, I think as a pure making money play, this is not really that significant. That's it for me for today. If you like this video, make sure to subscribe and find me with more videos every day before market open. I hope you have a successful day.